All right, let's dive right in. Today, we're breaking down the technicals of a stock that has been on an absolutely wild ride, REC. We're going to look at the signals, dig into the story the numbers are telling us, and try to figure out what could be coming next. So let's just start with the question that's probably on your mind. Seriously, how does that even happen? It's the kind of move that grabs every trader's attention. A surge like this, it's not just a number on a screen. It's a story of some really intense momentum and, you guessed it, high-stakes volatility. So let's take a look at just how this played out. I mean, just look at this timeline. Back in July, AREC was trading for just 83 cents. Fast forward to early October, and it's hitting $3.70. Folks, that's not just growth. That is an explosion. The sheer speed of this climb is what sets the stage for everything else we're about to talk about. So after a run like that, the big question is, can it keep going? Is there more gas in the tank? Well, to answer that, we have to start by looking at all the signals that are telling us this powerful trend is still very much alive and kicking. Okay, so this right here, this is one of the most classic signs of a monster bull run. When a stock's price is trading this far above its historical averages, it tells you the buying pressure right now is just completely overwhelming its past. It's kind of like it's in a league of its own at the moment. Now, what's really cool here is the beautiful, perfect stacking of these numbers. You see the current price way up top, then the shorter-term averages, then the longer-term ones, all in this neat descending order. Technicians love to see this. They call it a bullish alignment, and it's a textbook sign of really powerful, sustained upward momentum. Okay, before we get to the next piece of data, we gotta quickly talk about a tool called the ADX. Just think of it like a speedometer for a trend. It doesn't tell you if the trend is going up or down, it just tells you how strong it is. And really, all you need to remember is that anything over 25 is considered strong. And would you look at that? AREC's ADX isn't just a little bit over 25, it's at a whopping 48.78. That's not just a strong trend, my friends. That is a signal that the underlying momentum is exceptionally powerful. This just confirms what those moving averages were already hinting at. And the good news for the bulls doesn't even stop there. Other momentum indicators like the MACD are flashing buy signals. Plus, the on-balance volume, which kind of tracks where the big money is flowing, suggests that major players are piling into this stock. It's like all the green lights are on at the same time. And here it is, the million-dollar question, right? When a stock runs this hot, this fast, you just have to start wondering, is it flying a little too close to the sun? Because for every single bullish signal we just looked at, there seems to be a corresponding warning light flashing on the dashboard. And these signals, well, they suggest this engine might be seriously overheating. Now, to understand these warnings, we need to talk about the RSI. You know, the easiest way to think about it is like a sprinter. A sprinter can run incredibly fast, but they can't possibly maintain that top speed forever. An RSI reading over 70 is kind of like saying that sprinter is in the red zone and they're probably going to need to catch their breath soon. And this is where things get really interesting. With an RSI of 71.7, AREC is officially in overbought territory. Now, that doesn't guarantee a crash or anything, but it is a major warning sign that this rally might be stretched just a little too thin. And the RSI isn't a lone voice in the wilderness here. A whole bunch of other indicators are basically screaming the same thing. The price is trading outside its Ucker-Bollinger Band. That's way outside its normal range. The CCI and Williams % R are also at extreme readings. So the data is pretty clear. Multiple gauges are telling us this stock is stretched. And if you need just one number to really sum up all this risk, it's this one. Based on a statistical look at its own trend, the stock is trading over 30% higher than where it should be. This just shows you how far and how fast the price has detached from its own history, and that points to some significant short-term risk. So, what do we do with all of this? It's confusing, right? On one hand, you've got this incredibly strong momentum, but on the other, you've got these really clear signs of exhaustion. So let's put them side by side to really get the full picture. And here it is, the central tug-of-war for AREC. The left column is a picture-perfect uptrend, everything you'd want to see. The right column is a picture-perfect example of a stock that is, by multiple measures, way overextended and probably due for a pullback. This is the very definition of a technical crossroads. So when you see that conflict, the official automated signal from our source material makes perfect sense. It's a hold or neutral recommendation. Think about it. It's not saying sell, because that trend is just too strong to bet against. But it's definitely not saying buy, because that overbought risk is just way too high. Okay, so the stock is at this critical inflection point. What happens now? What are the potential paths it could take from here? Well, based on all this data, we can map out three main scenarios. But first, let's just quickly look at its volatility using a metric called ATR, or average true range. This is super simple. It just measures how much a stock tends to move on a typical day. It gives us a realistic sense of the kind of price swings we can expect. For AREC, that number is about 31 cents. So what does that mean? It means on any given day right now, we can probably expect the stock to trade somewhere in a range between about $3.38 and $4.02. This gives us the boundaries for what normal looks like. Okay, so this basically boils down to three possible scenarios. First is the bullish case. Momentum wins the day and the price breaks above that recent high. Then there's the neutral case. The stock just chops sideways, kind of catching its breath. And finally, the bearish case. Those overbought signals went out, and we see profit-taking pull the price back down to find some support. So the real key here is to keep an eye on these specific price levels. Think of them as the battle lines. 370 is the ceiling it needs to break through. On the downside, 307 is the first line of defense for the bulls. If that level fails, that 20-day average around 261 is the next major support level to watch. These prices will tell us which scenario is winning. And that really is the headline here. You have an unstoppable force, this powerful uptrend, meeting an immovable object, these massive overbought conditions. The coming days and weeks are really going to be a fight to see which one gives way first. So we're left with one final fascinating question. Is this incredible momentum strong enough to keep defying gravity? Or are all those warning signs telling us that a correction isn't just possible, but inevitable? That's the question the market is about to answer for us. Thanks for joining this explainer.